I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. corn conditions are off to a negative start following a speedy planting season. The USDA's crop progress report began reporting the corn ratings a little ahead of usual due to an early start in planting. Tuesday's report showed that 68% of the crop was in good to excellent condition as of Sunday, compared to 75% at the beginning of last year. That was also the worst initial rating for corn since 2019. Despite the lower good to excellent ratings, the percent of the crop in very poor to poor condition was more positive. USDA meteorologist Brad Rippey says current conditions aren't too concerning.
I think with a little warmer, drier weather, things should end up looking pretty good. A lot of those issues are more related to cool, wet weather than anything else at this early stage in the game.
Meanwhile, the USDA reported that 87% of the crop was planted as of Sunday. Progress was 2% ahead of the 5-year average. Corn emergence was seen at 67%, also ahead of the average of 60%. Tightening domestic cattle supplies continue to translate to lower feedlot inventories in May. The USDA's cattle on feed report released on Friday showed that the feedlot herd as of May 1st totaled 11.4 million head, down 1.5% year over year. Feeder cattle placements in April totaled at 1.61 million head, down 2.6% from a year ago. That was also the lowest April print since 2020. Despite smaller placements, producers with fall calves have been reportedly selling ballers instead of waiting to wean them due to current market conditions. USDA livestock analyst Mike McConnell says lower prices reflected tighter supplies outside of feedlots.
Lower placements are reflective of relatively limited supplies of cattle outside feedlots available to come in as feeder cattle, which is also reflecting relatively high prices that we're seeing for feeder cattle as well.
Meanwhile, fed cattle marketings last month totaled 1.83 million head, down 2.5% from last year. McConnell says that is also due to tight supplies rather than a lack of demand.
That's also just reflecting relatively lower inventories, both overall as well as cattle on feed. Also, that's reflective of the fact that we've seen really strong fed steer prices and support of wholesale beef prices as well. So even though we have relatively tight inventories of cattle, we're still seeing some pretty strong demand for beef, which is supporting the prices of both fed steer and wholesale beef prices as well.
USDA noted that the strength in fed cattle market has feedlots rushing to refill pens to capitalize on profitable returns. Better weather and higher expected acreage have Argentinian farmers on track to harvest the country's second largest wheat crop on record. The Rosario Grain Exchange currently forecasts the crop at 21 million metric tons. However, the exchange on Friday says favorable weather and excellent soil conditions for planting will allow farmers to increase their planting area. The Buenos Aires Grain Exchange already forecast acres to rise 6.3% from the previous season. So far, just 3.4% of the wheat crop has been planted compared to 13% a year ago. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.